Welcome to our today's session. Today we are looking at question number 3, Management Accounting, April 2022. Question number 3 reads, discuss 4 challenges that you are likely to encounter when installing a cost management system. So what are the challenges that one can encounter when installing a cost accounting system? Remember, you need to understand the qualities of the cost accounting management system for you to know the challenges that are likely to be incurred. But I'll go straight to answer the question. This is question number 3, part A. Challenges to be encountered. 1, you may have lack of support from the top management. 2, lack of cooperation from the staff. 3, we have changing environment. And number 4, we may have difference in lines of authority. So we were required to discuss 4, but I can give 5. Lack of clarity of objectives. So the main motive or intention of a cost management accounting system is it must be relevant and therefore be able to provide relevant information which the management can use for decision making. But when the installment process begins, there are some times when that process may have challenges, and some of the challenges is we may have lack of support from the top management. It is the top management that can facilitate or ensure that the installation of that system is done in the proper way, and again their support will ensure that the other staff also cooperate so that the system is installed effectively. So if we have lack of support from the top management, it may be a challenge during that process. The Roman 2, lack of cooperation from the staff. Sometimes if that installation of the system is something that maybe is to bring some changes, some staff may resist that change, and when they resist that change, they will not cooperate, and therefore, like when it comes to training, they may not be ready for the training, and it will drag the process of installation. Then changing environment. Sometimes we may have technological changes within the economy. Sometimes we have some systems that may become obsolete after a very short period of time. And because of that, when we are installing the system, you may not be able to detect, like it's a factor that is beyond the control of the installer to know whether we'll have future technological changes or not, which is a challenge. Then number 4, difference in lines of authority. This happens where we have people that are engaging in the process, but they have to report, or reporting is to different authority or authoritative people who have to ensure that ABC is done. And if you do not know your line of authority or where you are to report to, or maybe we have long procedures, then they may delay installation of that system. Then finally, we have lack of clarity of the objectives. What is that system meant for? You need to understand that for you to ensure that you make that system to match with the main objective of the business. So if there is no clarity then you may not be able to tell if that system will be a proper one. Then part B of the question, you are told that the following information is derived in relation to Baridi Co. Limited. The annual demand of its product, branded D, is 30,000 units. The ordering cost per order is 2,500 shillings. The holding cost is expressed as a percentage of the purchase price at 20%. The following price ranges are given with their respective quantity. So you've been given a table showing the range, the quantities, and the price. And the question is, advise the company on the quantity to purchase. So again, to answer this question, we have different approaches that we use to advise the management that wants to buy a quantity that is above the economic order quantity. And therefore, when you look at this question, it is simply referring to a multiple price approach. So it is not a one price approach, but it is a multiple price approach. And therefore, how do we advise the management where we use multiple price approach? The first step is calculate the economic order quantity at the current situation of that farm. So we need to calculate the economic order quantity of that farm before we incorporate any quantity. So how do we calculate economic order quantity? Simply the square root of 2D C naught over CC, where D is the annual demand. So this will be equal to the square root of 2 times. D is referring to the annual demand, and we are told that the annual demand of its product is 30,000. So multiply that by 30,000. CO is referring to the ordering cost per order. You are told that the ordering cost per order is 2,500. Then divide by. CC is referring to the carrying or holding cost. And you are told that the holding cost is expressed as a percentage of the purchase price at 20%. So we are to get 20% of the purchase price, but you've not been given the purchase price. But if you look at that table, we have range 1, quantities 1 to 3,000, and the price is 21. So where no discount is given, it means that the goods will be purchased at the original price, and therefore to know the purchase price is from that range where the farm is buying between 1 to 3,000 units, and that is 21 shillings. Then simply solve it. When you solve this, you'll get 5,976 units. So this is the current economic order quantity at which the farm is placing orders. Then you also need to calculate the total cost. How do we calculate the total cost? Total cost equals annual demand. It is annual demand, so I'll give the formula D over Q times CO plus Q over 2 times CC plus PQ. So D is referring to the annual demand, Q is referring to the order quantity. For our case, the order quantity is the economic order quantity, and then CO is the ordering cost per order. So when you take this, is the same as number of orders times the ordering costs per order plus Q is referring to the order quantity divided by 2, which gives us the average stock, times the holding cost per unit per annum, then plus the purchase cost. And the purchase cost is simply the cost of acquiring the product, which is simply the price per unit times the quantity. So to substitute this with figures, we'll have 30,000 units divided by the EOQ, which is 5976 units, times the ordering cost of 2,500 shillings plus Q is the order quantity of 5976 units divided by 2 times the holding cost, which was 20% of the purchase price. So this is 20% of 21. Plus the purchase cost is annual demand, which is 30,000 units. We multiply by the price per unit, and the original price is 2021. Then we solve that. This is 12,550 plus 12,550 plus 630,000. So the total cost will therefore be 655,100. So that means that if the firm is to buy without considering any discount, then this is the total cost that it incurs when it is buying 5,976 units. So that's the first step to consider. Then the second step is consider the lower class boundary. Looking at that table, you've been given the quantities, which is in units, 1 to 3,000, we have 3,000 and so on. So our intention is to ensure we advise the management. The firm is already buying at 5,976 units. So meaning we are to disregard all the other quantities that are falling below 5,976 units. And I'm saying that we consider that by looking at the lower class boundary. So meaning the other quantities will remain with is range 4 and range 5. This is at 7,001 and at 9,001. Those are the quantities that are above the current EOQ, and those are the ones we want to base on, so that we are disregarding all the ranges from number 1 to number 3. So once you have identified the ranges, we are to calculate the total cost at range 7,001 and at range 9,001. So beginning with at 7,001, total cost will be equal to, the same formula is applying. We have D over Q times CO plus Q over 2 times CC plus PQ. And so the annual demand, according to the assumptions, is it remains constant. So it is 30,000 units. Divided by the order quantity in this case is 7,001 times the ordering cost, which remains constant, plus order quantity in this case, which is 7,001 divided by 2. Carrying costs are 20% of the purchase price. So when you look at that range, the purchase price is not 21, but it will be 20% of 15.5 plus the purchase cost, which will be now 30,000 times the purchase price of 15.5. Then you calculate We have 10,713 plus, these are shillings plus. So this will give us 10,852 plus 465,000. Therefore, the total cost at that point will be equal to the total 486,565. So at 7,001, that's the total cost. We do again for 9,001. The quantity is remaining, that's 30,000 over 9,001. These are units. Plus plus 9,001 divided by 2 times 20% of the purchase price. At that point, the purchase price is 13 shillings. 13. Then plus the purchase cost, which is 30,000 multiplied by 13 shillings. Again, you get the total. This will give us 8,332 plus 11,701 plus 390,000. Therefore, the total cost will equal 410 and 33. So we want to advise the management. So which advice do we give? The advice is the firm should buy. We are comparing the total cost at the current situation, the total cost at order quantity 7,001 and the total cost at order quantity 9,001. Where are the minimal costs? So we advise the firm to purchase the order quantity that will enable them to make a saving. And according to this, the lowest cost is at order quantity 9,001. And therefore we give advice. Advice is the firm should purchase the order quantity, 9,001 to 10,000 units. So this will enable the firm to save. How much will it save? The difference between the cost, the current total cost, and that which we are advising it to. So that is 655,100 minus 410. It will be able to save 245,067. So that's the advice we give. Then we proceed on to part C of the same question. You are told that KNEC Plastics Limited manufactures plastic components for water pumps. The following budgeted information is available for 3 of their key plastic components. So you've been given the selling price, direct materials, direct labor, we have units produced, and then additional information. Note number 1, the total number of units of each of the 3 products for the period are as follows. We have product X, W, X, and Y, number of purchase requisitions, and then we have number of setups. Then note 2, overhead costs have been analyzed as follows. Receiving, inspecting, quality assurance, the amount is given. Production scheduling stroke machine setup is also given. Then required, determine the budgeted profit per unit of each of the 3 products using activity-based costing or the ABC method. ABC method is where we believe that we have activities in an organization that causes costs to be incurred, and therefore we identify the activities causing costs to be incurred. We group them together into what we refer to as cost drivers, and then any activity that is causing that cost, the costs that are being incurred are now put together into what we refer to as cost pools. And so we are to use what we refer to as cost driver rates rather than the absorption rates that we use in the traditional method. So the method we are required to use is the activity base. How do we go about that? Step number 1, we are to calculate the cost driver rates. How do we calculate cost driver rates? This is simply equal to overhead cost, and we divide by the cost driver. So remember, the cost driver is an activity that is causing the cost to be incurred. So we have the cost drivers that have been given. Number 1 is number of purchase requisitions. So we have number of purchase requisitions. To calculate that, note number 2, we have overhead cost. So you will simply take 1,400,000 and you divide by the number of purchase requisitions, and remember you compile for all the products. So we'll have 1,200 plus 1,800 plus 2,000. This will give us the cost driver rate. This is 280. That is per requisition. 280 shillings per requisition. The second one is number of setups. This will be equal to 1,200,000. Divide that by the total of the number of setups for all the products. And this is 1,500 per setup. That's step number 1, calculate the cost driver rates. So once we have calculated the cost driver rates, we now calculate the total cost. And we are calculating the total cost based on the ABC costing system. So we calculate the total cost. We have product W, X, and then Y. So we begin with the direct materials. Direct materials. Direct materials, the unit cost is 50 and the units that were produced were 10,000. We have direct materials. This is 50 shillings times 10,000. This will give us 500,000. This is for W, we have for X and for Y. For W, we have 15,000. This is still on direct materials. 15 times 15,000 units. This will give us 525,000. And for Y, we are taking, this should be 40 and not 50. X is 40 times 15,000. 40 shillings times 15,000, which is 600,000. And then Y is 35 multiplied by 18,000, which will give us 630,000. Then we move on to direct labor. Direct labor. So for direct labor, W is 30. We take 30 shillings. We multiply by 10,000, which will give us 300,000. For X, we have 35 multiplied by 15,000. This is 525,000. For Y, we have 30 multiplied by 18,000. And this is 540,000. Then we get the prime cost. Show the prime cost. This will be 800,000. Then we get the totals for X. 1,125,000. Then for Y, 1,170,000. From there, we now calculate the production overheads or cost. So according to the question, we are using ABC. I can use production overheads. So the production overheads that we have are based on the number of requisitions. Number of requisitions. I'll just write requisitions. It's based on requisitions. And number of setups. So we are beginning with the requisitions. For W, the requisitions were 1,200. And the cost per requisition is 280. So to get the amount for product W, we are simply getting the cost per unit or per requisition times the number of requisitions, which was 1,200. And this will give us 336,000. Do the same for Y. Cost per requisition, 280 times number of requisitions, which is 1,800. This is 504,000. For Y, 280 multiplied by 2,000 requisitions. This is 560,000. Then we have setups. So the cost per setup was 1,500. And for W, we had 240 setups. So you take 1,500 times 240, which will give us 360,000. For X, 1,500 times 260, which is 390,000. And then the last one, x is 1500 times 300, which is 450,000. From there, we now get the total cost. We get the total cost. This is 1,496,000. This is 2,019,000. 2,180,000. The question required us to calculate the profit per unit of each of the three products. So once we have this, we are to show the profit and then the selling price. So we are to determine the profit, but we have not been given either the margin or the markup, though we have the selling price. So remember, profit is simply selling price minus total cost. And so we are calculating the total, the selling price. Once we get the selling price, we will use that to get the profit. We were given the selling price, we know the number of units that were produced. So for W, the selling price was 200 shillings per unit, and the number of units produced was 10,000. So this will give us 2 million. And for X, the selling price is 183 times 15,000, which is 2,745,000. For Y, selling price is 175 times 18,000, and this will be 3,150,000. So from there, we can calculate the profit. Profit is now the selling price minus the total cost. So we have 2 million minus 1,496,000, which will give us 504,000. Then for W, we have 2,745,000 minus 2,019,000, which gives 726,000. And then Y, 970,000. And that is how this question was to be calculated. So thank you, bye-bye. Let's meet in the next session.